most requested video when I had asked you guys on Instagram what you wanted to hear about, and that is going to be how to purchase a home. So this is gonna be pretty much for a first-time home buyer, what the process looks like, defining some terms, and answering some questions you may have just in general about the home buying process. This might be a long video, so I'm gonna try and talk a little bit fast so that I can keep the video relatively short. So the first thing I'm gonna talk about is a couple of definitions that's going to help us later down the line because some of the terms aren't really self-explanatory. So the very first thing I wanna talk about is closing costs. This is a big expense that a lot of first-time homebuyers know nothing about, and it's very important for somebody to know before they get deep into the process. So a lot of people know what a down payment is. This is basically going to be a portion of the price that you're going to have to pay, generally represented in a percentage, like say 5% down, 10% down, whatever it may be. So if you've got a $100,000 house, you're gonna put 5% down, you're gonna pay $5,000. Well, closing costs are pretty much represented as a percentage as well, and these are going to basically just be the fees associated with purchasing a home. So there are costs associated with title work, and there are costs associated with getting an actual loan with a lender. So that's what's going to make up closing costs. These are going to be things like the appraisal, a loan origination fee, pulling a credit report, title insurance, title work, anything related with the HOAs and things of that nature. So essentially closing costs, you might as well just set your money on fire or throw it away because they are just an added expense. The best analogy that I have for closing costs is basically when you buy a plane ticket, you pay for the plane ticket and then you show up and then you have to pay a stupid baggage fee, right? So it's just an additional fee that's charged for the main event, which is going to be the flight, right? So these are going to be the costs associated with getting the loan for the main event of purchasing the house. And these are a super big deal to understand because they can range anywhere from 4 to 6% of the purchase price of the home. So if you're putting down a 5% down payment and then you also have 6% closing costs, you really need 11% of the purchase price in cash to have on closing day to buy this home. So that's a super big deal. A lot of people think that they don't need as much cash as they do. Now, there is a way around this because the loan programs allow you to ask the seller to cover a certain amount of your closing costs depending on what loan program you're in, anywhere from 3 to 6% depending on the loan program. So this is super important and it's something that you should think about when it comes time to writing the offer, and your realtor can help you and your lender can help you as well in terms of if you need to have the seller cover some of these closing costs for you. Okay, the next term I would like to define is going to be an earnest money deposit. And this is something that you and the seller agree upon in terms of price. Generally, it's $1,000 per $100,000 of house. So if you're buying a $100,000 house, generally your deposit is about $1,000. But once again, this can be negotiated between you and the seller for what you think is fair. And so what this represents is this is showing the seller that you have good faith to buy the home. You're putting up your $1,000 in return for them taking their home off the market. Now, this earnest money deposit is not going to be collected until after you get an offer accepted, generally within the first 3 to 5 days. And then the deposit is going to be held at a third party, generally a title company. And once you get to closing, say your deposit is $1,000, that amount gets applied towards your down payment. So say you had to bring $5,000 for the down payment, that $1,000 gets applied, so really now you only have to pay $4,000 at the closing table. And then the final term that I really want to define before we get into things is going to be the contingency period, also known as the due diligence period. And this is just going to be the period from the date the offer was accepted to the agreed upon date of the removal of the contingency period. And the contingency period is going to be the time when you get your inspections done and you get your financing secured. So in my area, the contingency period is generally 15 days. In other areas, it might be as long as 30 days, but once again, it's something that you can negotiate between yourself and the seller, depending on what you think is fair. So this is going to be the time that you get any inspections that you want done. Anything under the sun you can have done, but it's going to be at your own expense. So whether you carry forward with the deal or not, you're still going to have to pay the money for the inspections. And so during this contingency period, if anything is not right or unsatisfactory to you, the inspection report comes back with the foundation in terrible condition and it's chewed up by termites and you just don't want to pursue the deal anymore. If you back out before the end of the contingency period, you don't lose any money other than what you have to pay for the inspections, and you get your earnest money deposit back. Now, if you back out of the deal after the end of the contingency period, so say it was 15 days, you back out of the deal on 16 days or longer, 30 days, whatever, before closing, then the seller gets your earnest money deposit because that is their recourse for taking their home off the market and you defaulting on the contract. So the contingency period and the contingency dates are very important because that is where your earnest money deposit is going to be safe and not safe. So you need to make sure that everything is in line and lined up and ready to go before the end of the contingency period. Okay, so now that we've gotten some of the basic definitions out of the way, let's get into the process of purchasing a home. So the very first thing that you're going to need to do is you're going to need to talk to a good bank, generally a good local bank, about getting pre-qualified. So you need to get a pre-qualification letter from a lender, and this is what you should do before you talk to anybody else and see any homes. For multiple reasons. Number one is going to be, can you even qualify for a home loan? Is your credit high enough? Have you been on the job long enough? Are your debts too high? So if you can't even qualify for a home loan right now, you're going to need to be able to work on some of those things that are holding you back, so that maybe a year from now or 6 months from now, whatever it may be, you'll be able to then qualify for that loan. So right off the bat, you need to make sure you can get the loan. Also, what's super important about it is they're going to tell you how much you qualify for. So you can shop for up to $150,000, up to $250,000, whatever it may be. So that way you know what parameters you need to be shopping in. So you're not starting shopping for houses that are $300,000, but now you can only buy up to $225,000. And then the final reason that you need to have the pre-qualification letter is you're going to need to have that letter before you submit an offer on anything. Sellers are going to want to see that you have been pre-qualified, that you are able to get a home loan before they are going to accept your offer and take their home off the market. So super, super, super important. Get pre-qualified, step number one. So the next step comes the fun part. This is going to be when you start touring homes, and I highly recommend using a realtor and sticking to one realtor. And the reason is you're going to need to have a realtor to let you into the homes, right? And a realtor is free to you. So it makes sense to use a realtor. They're going to help you navigate through the process. They're going to be able to help send you new listings coming out, and they're going to be able to set up the tours for you, okay? And a lot of first-time homebuyers don't know, but you really want to stick with one realtor, okay? Because only one person is going to get paid out of your deal. So if you're flip-flopping around to a bunch of different realtors and not staying loyal, a lot of people are going to be doing a lot of work for you and getting nothing out of it. So you're shopping around for your home and you find the one. You find the one. So the next step is going to be submitting the offer. And this is where a realtor is going to come in handy as well, because they're going to be able to run comparables or comps. If you hear that term, that just means, say you're looking at house A, they're gonna look for houses similar to that house, you know, similar square footage, similar age, similar all those things. And they're gonna pull up houses, house B, C, D, E, and show, you know, the average price of what that house sold for, so you can see what house A is really worth. Are they overpriced? Are they priced good? What do we want to offer? That type of thing. So when they're talking about comparables and comps, that's what they mean. Comparable house sales. Now, hopefully you're the only offer, so you don't have any competing offers, and the seller can really just focus on your one offer. And a lot of times you want to give them 24 to 48 hours to respond to your offer, give them enough time to think it over. They can do one of three things. They can accept your offer, they can reject your offer, or they can counter your offer. And so this is basically where you may go back and forth with negotiations. They may counter a little bit higher, a little bit sooner closing date, or things of that nature. Now, a lot of times you will run into a new listing coming out on the market, you view it that same day, but there's a bunch of other people viewing it that same day, and you end up in a situation called multiple offers. And this situation pretty much sucks because you and however many other people really like this house, you're trying to put an offer in, and you have to now be competitive because there's not going to be a counter from the seller generally to you. They're just going to pick the best offer out of the bunch, right? So you have to put your best foot forward with your very first offer. So you might be the first person to submit your offer on this house, but then they get a couple offers in after yours, and generally what they'll do is they'll come back to you and the other people who have submitted offers, and they'll say, hey, we're in a multiple offer situation. Please bring your highest and best offer by 5 p.m. tomorrow, or something along those lines. So they're gonna give you an opportunity to boost your offer and make it as strong as possible. Now, you are going to have to be competitive in a multiple offer situation. Generally, there will always be somebody who offers full price and above asking price. So if your realtor is sitting here saying, hey, if you want this house, we have to offer above asking price, listen to them, because it's true. They are not trying to scam you. I feel like a lot of first-time home buyers are like, I would never offer over above asking price. Okay, well, if you're not gonna offer over asking price, you're not gonna get the house, and that's fine. Sometimes it takes people losing a house to understand that the realtor's not lying to you. So just know, if you really love a house and you're in a multiple offer situation, you may have to pay more than asking price, which is okay. It's happened to me on the house that I live in. We came in $5,000 over asking price, and we still didn't win the bid. we just got lucky because the first person's financing didn't work out. So when the time came and that deal fell through, they came back to us as the next in line. So it's very, very common in a multiple offer situation. Okay, so now you got your offer accepted. Woohoo! Now what? Right? Okay, so this is where the terminology comes in that I went over earlier. So in the first couple of days, your agent is going to collect the earnest money deposit from you, whatever amount you agreed upon. We're just gonna say it's $1,000. They're gonna get it from you in a check, and they're gonna go take it to a title company where they're gonna hold that $1,000 until either the contract is terminated or you're at closing day, right? And then also once your offer is accepted, the contingency period begins. So it's gonna be day 1 of the contingency period, and most of the time you have about 15 days to get everything figured out. So right away, you wanna start ordering your inspections and working with your lender on financing. You wanna get the loan application in, you wanna get the lender everything that they need so that they can make sure that they can close your loan no problem. There's no weird things in your finances. So this is when you're gonna work to have all of your inspections done and make sure everything is satisfactory to you and everything is good to go before the end of your contingency date, because remember, that's the only time that your deposit is safe. After the contingency date is removed, if you default on the contract, if you back out of the contract, the seller gets your deposit. And during this time period, your realtor is going to be handling getting all of the documentation to the proper people, sending the contract to the lender, sending the contract to the title company, ordering anything that needs to be ordered, answering any of the questions that you may have, and giving recommendations for any people that you may be needing in terms of inspectors or repair guys or whatever it may be. So then after you clear the inspections and the contingency period, the other big hurdle that you're going to have to face is the appraisal. So generally the lender is going to order the appraisal pretty soon in the process, but they generally don't go out for a couple weeks. So a lot of times the appraisal is not done until after the contingency period is over. But this is okay, because really the appraisal is going to be the only exception to the contingency dates. So what the appraisal is basically an appraiser goes out and looks at the house and says, okay, this contract is for $100,000. I'm gonna go make sure that the house is truly worth $100,000. It's not a rundown little shack, and that way I can bring it back to the lender and say, yes, you're loaning money on a house that's worth $100,000. Now, if the value comes in low, it opens the door back up for new negotiations. So you can either back out of the deal, you can pay the additional amount that you are over the appraised value. For example, if it's appraised at $95,000, the lender's only gonna loan you up to $95,000. If you really want the house for $100,000, you're gonna have to pay the $5,000 difference out of pocket. Of course, you don't wanna do that. Nobody wants to pay overvalue for a house. So then the final option is to chat with the seller about what you wanna do. So if they wanna bump down the price to the appraised value, that's generally what happens. So if for whatever reason the deal gets terminated after the contingency period due to the appraisal, coming in low, you are still entitled to your deposit. This is the only exception outside of the contingency date where you get your deposit back. Now, this is super important because I have seen a handful of times that for whatever reason, a few days before closing, the lender says, oh my gosh, we can't close this loan. You've racked up new credit card debt, or you've taken out a loan to buy furniture for your new home, and now your debt to income ratio is too high, something. And now you can no longer purchase this home because you can't get the home loan. And you're thinking, well, this isn't my fault, it's the lender. I'm outside of the contingency period. I want my deposit back because this isn't my fault. It doesn't matter, okay? If you're after the end of the contingency period and it falls through due to financing, you do not get your deposit back. So you need to be very careful within the purchasing period before closing that you're not racking up any new debts, taking out new loans, buying a new car, getting a furniture loan, things of that nature. So once you've gotten through these hurdles, the inspection and the appraisal, you are pretty much done. You're pretty much just waiting for the loan to get through underwriting and to have a clear to close. So the lender's probably gonna be asking you for paperwork throughout this whole process, and that's totally fine, that's very normal. And generally, the entire closing process from the time you get the offer accepted to the closing date when you're the owner of the new home is generally 30 to 45 days. So then once we get close to closing day and the lender finally gives us the clear to close, which basically just means that you're passed through underwriting, everything is good, you are good to go for the home loan. Then we get to go to closing, and this is the most exciting day. This is where you are going to show up to generally the title company, where you're going to sign a bunch of documents and you're going to pay the money that you owe. So this is going to be in the form of a cashier's check. Generally, they don't allow you to use a personal check or cash or anything of that nature. It needs to be a clear cashier's check, as well as bringing your ID. And once you are finished signing all of the documents, you are now the new owner. A lot of times you will be at closing with the seller. They'll hand over the keys, and straight from closing, you could rush over to the new house and move in. So it's a pretty long process. Once again, 30 to 45 days. I mean, you're looking at generally minimum of a month before you find your home and you get the day to move in. And sometimes it can be a headache and a pain in the butt up until then because you've got inspections and you're always being asked for documents from the lender and things of that nature. But it's definitely worth it at the end of the day. And just keep in mind that it is temporary and you're not going to be asked these questions forever, and there is an end date in sight. And being a homeowner is really truly a great thing. It's super rewarding and it feels great knowing that you're putting money towards an asset every month versus just throwing it away with rent. And I highly encourage, if you're interested in becoming a homeowner, maybe just talk with a lender, see what you can afford, see what you're looking at in terms of payments and things of that nature. And that's really all I have for you in today's video, guys. The home buying process, it may seem a little bit scary because you don't really know what to expect. But once again, if you're working with a realtor, which I highly recommend doing, they will help you through the entire process and they will help do most of the work for you, and they can keep you informed with updates and things of that nature. But I hope this helps give you a little bit of an idea of what you are going to be getting yourself into and help explain some of the terminology, so maybe it might not be so scary. And you can see that even when you do put an offer in and get an offer accepted, you still have a few weeks to decide if it's even something that you want to do. So it's not like do or die the second that you get your offer accepted. Please, if you have any more questions or if I've left anything out or anything goes unanswered, leave a comment below and I will definitely answer it. And I hope this helps you guys who had asked me to do this video. And that's all I've got for you today. So I will catch you in the next one. Talk to you later.